Right. Welcome, guys. My name is Zahir Anwari. I'm the co founder of Sublime Trading. If you could just give me a hello in the chat box, let me know that I'm live. This is my first live stream on TradingView. Ahmed, welcome. Good to have you on here. If you could just let me know that you can hear me okay, if you can see my screen okay as well. I've got a three-screen setup here of the S&P 500. In fact, let me just move this into the bottom corner. That might be better so that you guys can see the ticker symbols. Very good, thank you, Ahmed. I hope you are well as well. Thank you for asking. Okay, fantastic. Thanks for confirmation. Still kind of getting used to the functionality, so I'm not sure how many people are in. Lovely, thank you very much. I am using the browser as opposed to OBS or some kind of other setup, hence the green screen in the background. And we were doing some tests earlier, and it seemed like there was a fair bit of a delay, but hopefully that won't stop the quality of the streaming. Okay, so once again, my name is Zahir Anwari. I'm the co-founder here at Sublime Trading. We help people get consistent returns in the stock market using a proven analysis process and in just 30 to 60 minutes a week. Ultimately, we're all busy. We all have a lifestyle. We have jobs, we have careers, family, maybe married. We've got hobbies, we've got a social life. There's just so much going on day to day. And ultimately, what we want is to be able to analyze the charts, put our positions in our broker account, which should take a few minutes each day, get on with our lives. And then when we finish our day in the evening, look at our broker account, manage our positions, and just repeat that process every day. So that's ultimately the goal when it comes to investing or trading, however you want to label yourselves. We consider ourselves trend followers here at Sublime Trading. And I'm going to go through how we actually look at the market. What we're looking for are the big moves in the markets. So ultimately, we end up doing as little as possible for as much return as possible. And it's an approach that tends to, people tend to overlook. There's a lot of emphasis on day trading and short-term trading. And, people find out in their own time that it's not necessarily the best approach. What do you think? I want to start in the forex market first, then the stock market. Is this correct? Personally, Ahmed, I would say that isn't correct. And you're going to see why as I go through my analysis today. The stock market is always trending. There's always stocks that are giving opportunities. Sometimes it requires a little bit of patience, but the stock market, there's just thousands and thousands of stocks. So there's always an opportunity in the stock market. The forex market, you're limited in pairs. And because you're limited in pairs, ultimately people then end up day trading, looking for opportunities. What you want to be doing is investing. We're investors. We're not day traders. Day trading is just so inconsistent. I would tell people to look away from forex and day trading and focus on stocks and get better at stock trading, stock investing, and then translate the skills that you have learned and developed into the forex market. Okay, so I can't see as yet. I can't see how many people are on this stream. So I'm just going to keep on. I'm going to just dive straight in. And as people come in, they can say hello. And if there are any questions, just of course put them in the chat box. Okay. So let's get into the setup that I have here. This is my 3-screen setup. This is the same setup that I use regardless of which markets I'm looking at, regardless of which assets I want to invest or trade in. This is the setup I have across the board. In the top left, I have the monthly time frame. In the top right, I have the weekly time frame. And down here across the bottom, I have the daily time frame. Now, let's start with the monthly time frame. What I like to do is look at the monthly time frame then go to the weekly time frame, and then come down to the daily time frame. What we're looking for is alignment. I'm looking for an environment where all three time frames are moving in the same direction, either bullish or bearish. If they're all bullish, I will take long positions. If they're all bearish, I will look for short positions. If the market has a mixture of bullish and bearish factors, then I tend to stand aside. And that's really, really important. It's that element of patience that people fail to apply to their analysis and to their approach, because ultimately people want money, they want it now, and so they trade every single day. And often people are trading in environments that are not high probability. We have to establish high probability environments. So let's start with the monthly time frame. Now, on the monthly time frame, let me just tidy this up. Right, okay. On the monthly time frame, this is the S&P 500. Now, we know the S&P 500 has been bullish really since 2009, which is this low point here. We've been on this huge bull run. And then this year, we've seen a correction. However, if we look at what's been happening since October and November, we're seeing a bounce to the upside. Why is it bouncing from this area? Is because it came to this red line here, which is one of our tools. And this is the low of last year. So the lowest point of 2021, this is the red line. Price came to around this level and it's now starting to bounce. What we want to see is price work its way back to this green line, which is the highest point of last year. So this is the highest point of 2021. And ultimately, we want to see price move above this level, and then we want it to start printing new highs. Okay, so monthly time frame is very, very important. What I'm looking for is price to be bullish and ideally above the highest point of last year. Now, if we move across to the weekly time frame, and I'm just going to compress this because the weekly time frame is really important on the 200. On the weekly time frame, the 200 simple moving average is extremely important. I'm just going to tidy this up. Just going to get rid of this tool here. So if I just compress the chart, if we go back to this area here, this is 2008 when the market broke through the 200 moving average, which is this black line, and then declined by roughly 50%, if I remember correctly. I mean, this whole decline, you're looking at around 55, 56%. And then when it broke through the 200 moving average, it declined by 40, 50% roughly once it broke through the 200 moving average. Now, if you have a look at what the S&P 500 has done since then, it was in, let me just expand the chart a little bit. Okay, it was in 2010 when the S&P broke back above the 200 moving average. Now, if you have a look at what it's been doing since, it's bounced off the 200 moving average in 2011, went on this bull run, came to the 200 moving average in 2016, bounced, came back in 2018, bounced. Now, this area here, this is the coronavirus. This is 2020, when we had the decline, a 35% decline in 2 months. And then look, the market rallied. So we can kind of ignore this because it was a black swan event. So we can ignore that for now. Black swan events happen every so often. They have some kind of impact, create volatility in the market, and then the noise gets absorbed into the market and it continues. So what we can see here is that 2018, the market bounced. Let's ignore coronavirus, and we can see it went on this huge bull run. And what's happened since the start of this year? It's come back to the 200 simple moving average, and it's bouncing. So we know that since 2010, the S&P 500 has a habit of bouncing off the 200 moving average. Now, of course, it isn't guaranteed. It isn't 100% guaranteed that we won't suddenly see a reversal and the market start dropping. Of course, that can happen. But based on history and based on what we're seeing right now, there is a very high chance that the 200 simple moving average on the weekly time frame will act as support and the market is starting to move up. Now, this orange line is the 50 simple moving average. So what I want to see is price move above the 50 simple moving average, and that will be my confirmation of a bullish bias and when I will start looking for long opportunities in the stock market. Now, in addition to that, so you can see that here in more clarity now, price bouncing off the 200 moving average, It's still below the 50 simple moving average. I want price to move above. And also you'll notice I have a trend filter. I've got bars that are red, bars that are gray, and bars that are green. So when the bars are green, that's when I'm in a bullish market. So I'm waiting for my trend filter to turn green above the 50 simple moving average. And that's when I will have a bullish bias. Now, in addition to that, if we go down to the daily time frame, you'll see that the daily time frame is below the 200 moving average. Again, as I said earlier, if we have a mixture of bullish and bearish factors, then I tend to stand aside. So 2022 is not a bearish year, as a lot of people will have said in the media and in the news. We're in a bearish year, we're in a market crash. It's incorrect, because going back to the weekly time frame, a crash is when price breaks below the 200 moving average, like we saw, if we just go back in time, like we saw in 2000. This is that period here. You can see that price broke below the 200 moving average. Did the same in 2008. It broke below the 200 moving average. But this year in 2022, we've not seen price break below the 200 simple moving average on the weekly time frame. So to call this year a bear market is incorrect. It's been a correction, and certainly the tech sector has taken a massive hit. If you look at stocks like PayPal, PayPal has dropped by 80%. That's massive. But not all stocks have dropped by significant amounts. In fact, there are stocks that are still in our portfolio, stocks like McKesson, ticker symbol MCK, that has rallied by 60%. I'll be showing you that in a second. So this year has not been a bear year. This year has been a year of correction. And the fact that we're seeing a bounce now could potentially mean the end of this correction and a move back towards the current all-time high. What we need is further confirmation. And that further confirmation is when price moves above the 200 moving average on the daily time frame. And it's really important, because if we look at what's happened this year, we had this high from January, start of January, market declined, worked its way back above the 200 moving average in March. That was short-lived. The market fell, came back to the 200 moving average in August, declined, and now we're back to around the 200 moving average. So this is why we need to apply a little bit of patience, because the market could find resistance around this area and then start working its way back to the downside. However, if we get this kind of setup, this is the kind of setup that we're looking for. Let me see if I can just get a pen. Yeah, this is the kind of setup that we're looking for. We want to move to the upside, we want to move to the downside, and then we want to move back up. And we want the 200 moving average to act as an area of support. So the way we will get confirmation of that is ultimately at what we call a bullish flag formation. And that is when the market moves above the 200 moving average, it comes back to retest it, and then it starts continuing on its climb up. When we get this setup here, this will be our confirmation of a bull market, and when we can start looking for long opportunities. Okay, I hope that makes sense. Okay, now let me just figure out where this eraser tool is. I think if I'm correct, we can just do this here. 1 second. Yeah, remove 12. There we go. Okay, so that is my stance on the S&P 500. I hope that's clear. What I'm looking for is further confirmation that we are in a bull recovery. We are seeing it because price is bouncing off the 200 moving average. But we haven't got full confirmation as yet because price hasn't moved above the 200 moving average on the daily time frame. Once we get that alignment, the weekly and the daily moving in the same direction, both above the 200 moving average, both have green trend filter. You can see the trend filter is already green on the daily. That happens because it's a faster moving time frame. So the daily, the trend filter is green. When we get the green trend filter on the weekly as well, then we can go to town. We start looking at some of the stocks on our watch list. So let's have a look at some of the stocks on my watch list. So if you look at Agilent Technologies, ticker symbol A, currently going through a bit of a consolidation. But if it starts breaking out above the high of last year, this is a stock that I will look to get into. You can see that it's performed well. It's got a good period of performance here. Remember, guys, technical analysis is very simple. What we're looking at is the history of the asset. If the asset has performed well in the past, then it's likely to perform well in the future. If it hasn't performed well in the past, then it's not likely to perform well in the future. Let's look at an example of that. So if we look at Twitter, everyone is talking about Twitter at the moment because of Elon Musk and what's happening with free speech and all of that sort of noise and confusion and mayhem that's going on in our media channels. But if we actually look at the performance of Twitter, it's a very poorly performing stock. It's a sideways stock that swings up, it swings down, and there's just no direction. So this isn't the kind of stock that you want to get involved in based on what's happening in the news. You certainly don't want people like Elon Musk, who's a great individual in terms of what he's achieved, whether you like him or loathe him. In terms of his success as a businessman, you can't argue with it. The guy's a billionaire, but in terms of how his influence should impact you as an investor, there should be zero influence because the charts tell us what we need to know. And Twitter has a poorly performing stock. Now, of course, that may change, but until that changes, we don't want to guess or predict the change. We want to see price dictate a change. And when price dictates a change, that's when we can jump in. So this is not a good looking stock. Now, if we compare it to another company that we will be familiar with, Microsoft, look at the performance of Microsoft. Microsoft has a beautiful performance of history. Imagine if you got into Microsoft at these levels here, $30, $40, and look at where it peaked, $350. And of course, the tech sector in general has taken a bit of a hit this year, and that's okay. We can't just expect the stock to continue to go in one direction. It trends, then it corrects, it creates a base or a foundation, and then it goes on its next leg up. So during this period, you stand aside and you look at the better stocks that are out there. And this is part and parcel of portfolio management. You've got to know which stocks to be in for a period of time, 12 to 24 months, take your profit, and then rebalance your portfolio. And the way to do that is to look at sectors, look at the strongest sectors, and then look for the strongest stocks in the strongest sectors. So the tech sector has taken a real hit this year. A really good example of that is PayPal. PayPal has fallen 80%. I mean, that's a massive drop. So you don't want to be holding PayPal in 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 a period like this where it just keeps on dropping. You certainly don't want to be buying PayPal thinking it's going to reverse because it can just keep on dropping against you. What you want are stocks like McKesson Corporation. So McKesson Corporation, we entered this at the end of last year, and McKesson Corporation is up roughly 65% this year, while a lot of tech stocks are down 30, 40, 50, even 80%, stocks like PayPal. So this is really the art of good stock investing, is first of all, look at the S&P 500, look at whether the S&P 500 is confirming a bullish market, a bearish market, or a sideways market. When the S&P 500 is confirming a market direction, you then have to look for the stocks that are performing better than the S&P 500. So McKesson Corporation is a really good example. The S&P 500 is down 20-25% this year. There is a recovery, but McKesson Corporation is up 60%. Why would you want to be holding PayPal or Microsoft when you should be in McKesson Corporation? And just to look at what's happening on the other time frames, look how well it's performing above the 200 moving average and the 50 simple moving average on the weekly time frame. And then if you come down to the daily time frame, again, performing really, really well. Nice, clean looking chart. Yes, there's these pullbacks and corrections, but that's where you've got to sit out, apply patience, and let the market move in the direction that it's moving. And then you follow with a trailing stop loss. And when the trailing stop loss is hit, you exit your position. Okay, so let's just go back to Agilent Technologies, see what's happening. Okay, it's still within the high and the low of last year. So ideally for me, I want to see the market move above the high of last year, and then I will start considering positions. On the weekly, price is above the 200 moving average. The trend filter is green. And if you look at the daily, it's starting to display bullishness. But because it's still within this consolidation area, I'll be standing aside until the market actually breaks out. So let's have a look at some stocks that are getting closer and closer to breaking out. Here's another stock, ABBV, another really good performing stock. You can see it's performed well here, went through a correction, breakout, is gone for another correction. When it breaks out, we're likely to see this move. On the weekly, you can see it's above the moving averages, the trend filter is green, and on the daily, it's above all three moving averages, the trend filter is also green. So the fact that the weekly and the daily are suggesting a green trend filter, that's a sign that we're starting to see early bullishness. Okay, now ACM. This is a stock that's been picked up by our scanners. ACM, look at it, guys. It's already printing new highs. When we looked at ABBV, it still hasn't printed new highs. If you look at Agilent Technology, it still hasn't printed new highs. But excuse me, guys. If you look at ACM, it's broken out. It's printing highs. These are the kind of stocks that we really want to be watching because they're starting to move. On the weekly, price above the 200 moving average, the trend filter is green. And on the daily, price above all three moving averages. So in terms of all three, I've got the 200, the 50, and the 20 simple moving averages, and the trend filter is green. And you can see that the moving averages are aligned. The 20 is above the 50, which is above the 200, which is confirming we're in a bull market. Now, we don't actually need the moving averages. We can see that there is bullishness, there's a bullish trend in play, but the moving averages are confirming that. And that's why I like to have these moving averages on the chart. I always focus on price, by the way, guys. That's always my first indicator. All these other indicators I'm looking at, they're lagging indicators, and I look at them for confirmation of what price is doing. Okay, another stock that has been in my portfolio over the years is AJG, which is Arthur J. Gallagher. Guys, look at the history of performance. Apart from if you look at this bit here, which is coronavirus, it's got a very, very good history of performance. It's coming up to $200. Imagine if you got into these stocks around these levels, these $40, $50 levels, how much profit you will have accumulated. On the weekly, price above the 200 moving average, the trend filter is green. And on the daily, price above all three moving averages, the trend filter is green as well. So again, these are stocks that are going to perform well once the S&P 500 confirms a bull market. So we just need to apply a little bit of patience. If you're going to jump in early, reduce your risk. But be aware that if you jump in early, the market may go against you and you might get stopped out. So there's pros and cons. If you go in early, you may make more profit, but you leave yourself open to being stopped out on fake breakouts. If you apply a bit of patience, you may make less profit, but you'll lose less money with fake breakouts. So it depends on whether you want to be aggressive or conservative. I prefer to be a little bit more conservative, wait for the right market conditions, and then start taking position. Because through compounding, the returns are phenomenal. So I don't need to get in too early. Okay, let's have a look at another stock, MetLife. If I just open up the monthly time frame, you can see that this is actually going to be a very interesting stock. The reason for that is because it's got a good history of performance here. We can see that it trended very well. Since then, it's been in this huge sideways market. Now, what's good about a sideways market is that it acts as a foundation for the next leg. Think of it as a tree. If the roots of a tree are strong, the tree itself will grow to be very, very strong. If the roots of the tree aren't strong, eventually, with a bit of wind, the tree may fall. So what makes a good foundation for a trend or the next leg in the market is a consolidation, a base. And this is what we're seeing here. This consolidation goes back to 2007. You will have heard the expression, guys, the longer the consolidation, the bigger the breakout. So this is a really good example of a long consolidation and then a breakout. And if this can start moving, if you look at that last period of trend, it started in 2002 and ended in 2007. We can even take it from the breakout, 2004 to 2007. So that's a 3-year period of trend. So potentially, if we time this right, we could hold this stock for another year, 2 years, 3 years. Weekly, above the 200 moving average, the trend filter is green. And on the daily, price above the 200 moving average, the trend filter is green. So you can see that we're starting to see alignment across this particular, well, we already have alignment. Monthly is looking good, weekly is looking good, the daily is looking good. So we have alignment. But when I say we don't have alignment, I'm still waiting for the S&P 500 to set up, confirm bullishness, and that's when I'm going to go all in. Thank you for the coins. Look, I'm still getting used to the platform. This is all new to me. I'm not 100% sure what the coins mean. I'll look into it, but I appreciate the coins. Akol Esnikov. I hope I'm saying Akol Esnikov. I think that's a Russian name, hopefully. Thank you very much. I hope I've said your name correctly. Okay, let's move on. Next stock here, Marathon Petroleum Corporation. Now, I know what you guys are thinking. You're probably thinking, damn, I don't know these companies, right? These aren't stock names that I'm familiar with. And this is the beauty of trend following and the beauty of staying neutral to ticker symbol names and brand names and focusing actually on the charts and the performance of the stock. Because we don't care about brand name. We care about profit. As investors and traders, that's our primary focus. Which asset has the highest chance of returning a profit? That's our goal. And it doesn't matter whether it comes from Microsoft, it doesn't matter whether it comes from gold, euro, dollar, or MPC here, Marathon Petroleum Corporation. What is important is that if I give you a chart of gold, if I give you a chart of the euro dollar, if I give you a chart of Bitcoin, if I give you a chart of MPC, and I say to you, right, look at these four charts and choose me the chart that has the highest chance of returning you a profit. You have to be able to do that without looking at the ticker symbol. You don't want to look at gold and go, I love gold. All my jewelry is gold. All the gold in my family is yellow gold. My wife, when she got married, was covered in gold. That's not what's going to influence you when making a decision. Oh, I like Microsoft because I've I have a Windows platform and I've used Microsoft for 20 years and I love Microsoft and Bill Gates is my hero and that's why I think Microsoft is a good stock. No, what's correct is looking at the chart, looking at the history of the chart, looking at if that chart has performed well in the past, and what is it doing now, and if it's setting up now to repeat its past performance, that is what makes a good stock or a good chart. I hope that's clear, guys. Please give me a thumbs up or a yes in the chat box just to make sure that I'm not losing you. So if we look at MPC, you can see that it's performing. It's starting to perform. Look, it's moving. It's creating new highs. This is a good, interesting looking stock. And the reason why I like stocks that are creating new highs is because there's no resistance above the stock. If you try and do the Warren Buffett approach, which is undervalued and looking for cheap stocks like PayPal. So if we just go back to PayPal, for example, what people want to do is, can you imagine if people bought in at $260 and then it dropped and then they think, oh no, it's definitely going to go up. And then they buy more at 240, 200, 180. They just end up losing more and more money. This is what is known as catching a falling knife. This is why I don't recommend the undervalued Warren Buffett approach, because it's a long-winded approach that requires you to hold positions in negative for years. And Warren Buffett is a very wealthy individual. He can do that. We don't have that luxury. Even if you've got 6 figures or 7 figures, you do not want to do the Warren Buffett approach. You want the trend following approach. You want the turtle trader approach. You want the John W. Henry approach. You want the Paul Tudor Jones approach. You want the Jesse Livermore approach, the Nicholas Darvis approach. And that is, you go in the direction of the market. If the market is bullish, you buy. If the market is bearish, you short the market. The market is going sideways, stand aside. And that is how you will consistently grow your account year in, year out. Don't do this Warren Buffett value approach. You're only going to end up with a scenario where you have a portfolio of stocks that are just dropping against you, and then you have to hold these positions for years with no growth. It's slow. It's not for you. It's not for us. Let me go back to what was that stock? Yeah, this one. Okay, so MPC. If you look at it in comparison to PayPal, performing very, very well. And this is what you want to be looking at: stocks that are performing very well. And what I mean by that is trended well in the past and are now trending well now. Okay, that's the FTSE, which is the UK market. I don't know if you guys look at the FTSE 100, but I tend to look at it just to see what's happening. And you can see, looking at the FTSE 100, the UK market is starting to recover. And the reason it's recovering is because the S&P 500 and the stock market is recovering. Remember, whatever happens in America, the rest of the world tends to follow. So there's an expression which is, if America sneezes, the rest of the world catches a cold. So the S&P 500 is really the only index I look at, because whatever's happening in the S&P 500 generally is an indicator of what's happening around the world. Now, because I'm in London, I look at the FTSE 100 just to keep an eye out on what's happening in the UK market. And then there are some stocks that I'm looking at in the UK market. TEP, Telecom Plus. You can see, again, look how well it performed here. A very good period of performance, which was 2010 to 2013. That's 3 years of performance. It's now going through a sideways market, which is a consolidation. It's broken out of that. So remember what I was saying about a consolidation or a base being a strong foundation for the next trend or the next leg up. This is what we're seeing. We're seeing a consolidation, and we're now starting to see movement to the upside. And look at this stock, it's creating new highs. If you go to the weekly, it's above the 200 moving average. The trend filter is green. And if you come to the daily, price above the 200 moving average, the trend filter is green. And if we look a little bit closer, guys, look, it's breaking out of another base, right? So this is really interesting, because you've got base within a base. You've got the long-term base on the monthly time frame, which goes back to 2013. So you've got almost a 10-year base here. But then you've got a much shorter base, which goes back to August. So August, September, October, November. So a 3-4 month base here that is now acting as a base for the next leg up. So this stock, from a UK perspective, as a UK stock investor myself, this is looking very, very interesting. Okay, that is me for my first live stream, guys. I really appreciate the people that have been on here. I'm hoping to do these on a regular basis. If I do it on a regular basis, I'll be able to connect with more of you guys and really sort of give you an idea of the analysis and the techniques and the stocks that we have on our watch list, and help you guys become better stock investors. If there are any questions, guys, this is your time now to put them in the chat box, and I will answer your questions before I go off air. Once again, I just want to say thank you for the 100 coins. I appreciate that. I'll just give it a minute. I know there's a bit of a delay with the stream, so I'm just going to give it a minute or so before I go offline, just to make sure that I have not missed any questions. I'll just have a look at this notification, see if that means anything to me. Okay, just picked up a couple of followers. Okay, that's great. And I know we have recorded this stream, so it will be in our profile if anyone wants to catch up on the stream. And of course, guys, if there are any questions, if there's any analysis that you'd like me to do on the next live stream, you can direct message us, and I will make sure that I go through those in the next stream. Okay, looks like there aren't any questions coming through, so I'm going to end the live stream here. Appreciate all of you guys that were on here. Have a lovely rest of the day. I know in the US it's a holiday today, so if you are in the US, I hope you're having a lovely day. And the rest of you guys have a lovely rest of the week and weekend, and I will see you guys on a future stream, which will be next week at some point. Take care, guys. Bye-bye.